Hello and welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because Bitcoin continues to follow our normal cycle scenario in yellow quite closely, but I have noticed that this has become the consensus view recently, and the exact same people screaming for alt season and 100k Bitcoin March, April, and May of this year are now calling for a bottom at 40k after one last capitulation event, and then we're going to get the golden bull run started in Q4 of this year. And we know that Bitcoin tends to do the opposite of what the majority of market participants expect, which is why we always include multiple scenarios on this channel, even if it's not our base case. And we always talk about various price levels that Bitcoin could go to, and not just the one that we think may or may not be the most likely. I can make very strong arguments why Bitcoin should bottom around this price region and not go to the perfect round number of 40k that everybody is expecting. For one, let's not forget what happened the last few times that everybody was expecting Bitcoin to go down to a certain level. Everybody was expecting 30k in the beginning of this year when the ETFs went live. That ended up not happening. Everybody expected 20k Bitcoin when the SEC was coming after Coinbase and Binance towards the end of 2023. And of course, that ended up not happening. And let's not forget the most famous one, the end of 2022 and the beginning of 2023, when everybody was waiting for 10k Bitcoin or even 12k, and we never ended up going to those levels. And everybody just keeps moving their price targets lower and lower as Bitcoin goes down. And whales and market makers take advantage of that fear and sentiment and accumulate above the price level everybody's expecting, so that price level never ends up getting reached. Not to mention, everybody is talking about September seasonality, and we're already down over 7% for September. September being red doesn't mean we have to have a negative 20% or a negative 30% month. And the median, which is my preferred thing to look at, is negative 6%. So we're already kind of in line with September expectations. And many investors are aware that this is driven by the S&P 500, and September being the worst month for the S&P 500 historically, with an average return of negative 2%, and we're already down over 4% just 1 week into this month. So I wouldn't be surprised if we spent a good amount of time chopping around while everybody is expecting significantly lower prices, and we never end up going below the 50k region. And those are my arguments for a bottom at 50k. Now, you guys know my base case for a long time now has been around 40k, just because there's a lot of obvious reasons why that level makes sense. For one, that's where our 200-week moving average is going to be soon, and that's one of the most important support levels in Bitcoin's history. It's also where the 2024 yearly open was for Bitcoin at about 42,000. And of course, it's also our mid-range and 0.5 Fibonacci level of the entire bear market. So revisiting that level before going higher would make a lot of sense to me. And of course, we're still expecting a lot of volatility and uncertainty with this upcoming election race. Even though Trump is a bit ahead now, it still remains close, and a lot can happen between now and November. We're about 58 days away, and we know that with Bitcoin's volatility, a lot can happen in 60 days, and we can easily go as low as 40k, especially because we expect the volatility of the S&P 500 to increase as we approach November, and we've seen that trend so far. And if we're seeing an increasing volatility in the S&P 500, that tends to be pretty bad conditions for Bitcoin. Usually whenever the S&P 500 is doing poorly as marked out in red, Bitcoin is doing terribly. So increasing volatility in the S&P 500 and increasing uncertainty, which markets hate, could potentially send Bitcoin lower. And then finally, one of the best arguments for us revisiting 40k is it's right between our ETF launch high and ETF launch low. If you guys remember, the ETFs launched, everybody was going euphoric and excited the day the ETFs went live. Then Grayscale came in and started dumping supply. We came down to 38,000, bottomed there, and then started our insane rally. So it would make sense to come down and test the conviction of all of those ETF buyers by retesting the low 40k region and potentially shaking them out. And I'm sure you'd all agree that the majority of this rally was driven by ETF inflows. If we take a look at the inflows from January to March, they were absolutely incredible and caught the majority of market participants, including myself, off guard but ever since they've kind of slowed down with some small increases here and there. And what do you know, ever since the inflow slowed down, Bitcoin has started consolidating. Sellers have been offloading supply, buyers have been stepping in, and we've been slowly working our way downward. So completely retracing all of that ETF hype before we really rally higher would make a lot of sense. And those reasons are why I think that 40K is the most likely scenario, but I'm not 100% convinced of it now that everybody is starting to agree. And finally, let's talk about the upper to mid 30K region, where a lot of people would be caught off guard, especially people longing Bitcoin on leverage when we come down to that 40K level. And perhaps the strongest argument for this is one, Bitcoin has retested its macro line each and every cycle. So if we look at what happened in 2011, we come down to this macro support, bounce, lose it, test it as resistance, and then once it's reclaimed in the yellow reaccumulation zone, we retest it and then go back to previous all-time highs. Same thing in the 2014 cycle, bounce off support, get below it, retest it as resistance, breakout, retest it, and then work your way back to all-time highs. Again, once again, same thing in 2018, support, 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 we lose it, we break above it, don't retest it immediately like we did in the previous two cycles, and we retest it way later in March of 2020, and then we have the incredible rally back to all-time highs. And again, this cycle, just like the previous one, we got way ahead of ourselves, never retested that macro support level that was turned into resistance. And the best argument, in my opinion, for 30K being revisited is that we need to retest that macro support, shake everybody out, remove all the FOMO buyers, and then take off at the end of this year or early next year. And the other variable that could send us that low is recession fears. We know the Fed is going to start cutting rates soon, and there's a lot of disagreement over whether they're cutting things because the economy is breaking and the market is going to go down significantly, or if they're cutting to get ahead of market and economic weakness and it's going to result in bullish rate cuts. But regardless, if we do have a soft landing or the macro uncertainty gets worse as we approach the end of the year, it wouldn't surprise me if Bitcoin ended up going to the low 30,000s. And now this brings up a good question. If I think 50K is a possibility and I think 40K is a possibility and it's my most likely scenario, but I'm also open to 30K Bitcoin, how does one actually position around this and what do I actually plan to do? For me, I like to simplify it as much as possible. I just have a fair value range for Bitcoin that I don't plan to buy or sell in, and I patiently wait for either Bitcoin to enter what I considered undervalued region, which is anything under 50K, and slowly go back to accumulating at those levels. And then once Bitcoin is back in the fair value region or above it in the overvalued region, I would consider taking profits and perhaps scaling out if I felt overexposed to the market. So right now I have upside exposure that I'm quite happy with if for some reason we see Bitcoin take off here, but I also have enough cash on the sidelines that if Bitcoin does go lower than many are expecting, I'm gonna have dry powder to take advantage of that opportunity and manage my emotions when it comes. So I'm not panic selling or making emotional decisions like somebody who's 100% in altcoins or using leverage to try and add risk in this market. So that's my strategy for now. I'm very open to all of these scenarios, even though the normal cycle is my base case, and I'm very open to Bitcoin bottoming at any of these regions, even though 40K is what I think is the most likely, even though the market expects it as of right now. And let's not forget that even though everybody is bearish expecting 40K right now, if we see a strong bounce or if some bullish news comes out and we start rallying, everybody will very quickly flip back to bullish once again. And maybe that's the fuel that's needed to take us down to that 40K region that everybody is expecting currently. As for Bitcoin's price action, still no signs of life yet, and we've been short-term bearish ever since we had that fake out back into the range and close back below. And it's no coincidence that when the US dollar index got that bounce off the range low we discussed and has been bouncing for the past 2 weeks, Bitcoin has been selling off for the past 2 weeks. And these don't always have a short-term correlation. I'm a lot more focused on their correlation on larger timeframes because Bitcoin's mania phases historically have required large drawdowns in the US dollar index. And I don't expect any incredible price action from Bitcoin until we really see that drop in the US dollar index, which I don't think is going to happen immediately, because as of right now, we're still getting that bounce off of the 200-week moving average and range low. So perhaps we work our way back up to that 20-week moving average, then roll over. And that's also conducive to when we would perhaps see an alt season. We also need those Bitcoin mania phases and prolonged US dollar index drops for those alt seasons as well, even though people have been calling for them each and every week over the past 6 months or so. And speaking of the US dollar index, we know the main driver is expectations for Fed policy. Right now, the market is expecting one rate cut in September of 25 basis points, and then a 50 basis point rate cut in November, and another 50 basis point rate cut in December. And this makes sense. They probably want to have a small rate cut before the election so they don't look too political. But then once the election is behind us, they're going to start cutting rates more aggressively. But this tends to change quite significantly as we get more data. And I know there's still many people that think rate cuts are bearish. I'm kind of 50-50 on it. I don't think the economy is as bad as many people are saying. And I do think the returns of the S&P 500 12 months after the first rate cut in previous cycles do tell an interesting story. I do agree that it's more useful to look at recent cycles than what was happening in the 1930s, 50s, 60s, or 70s, because recently we've been going from the zero bound and the market is a lot more used to lower rates. So rate hikes tend to be a lot more damaging to markets. But you guys know what I always say about the national deficit being run by the federal government and how they're spending a lot more than they're bringing in on revenues, which in my opinion is keeping the economy afloat because we're already running recession time deficits before the economy even enters recession. And we know that the main reason why the Fed is starting to cut rates now is inflation is quite low compared to when they started hiking. We are at a 2.6 handle on their preferred measure of inflation, core PCE. And I like to use trueflation as a measure of where we're headed on inflation. And it's already way lower at 1.25%. I know it's not a perfect measurement. A lot of people hate using trueflation. A lot of people love using it because they're using a lot more modern data and they tend to be a lot more accurate than the US government's numbers. So I like to use it as a leading indicator of where inflation is going and whether or not we need to be afraid of a resurgence of inflation in the short term. And speaking of the labor market, we had a pretty solid unemployment rate print this month coming in at 4.2%. It's nice to see that we weren't accelerating to the upside. Again, one print is not a trend, but I looked at the past 3 recessions and averaged what the unemployment rate was at when we entered recession, and it was about 5%. And we're still quite a ways below there, even though we're trending in the wrong direction. So until we're at 5%, I'm not that afraid of a recession this month or next month. And this also agrees nicely with what we're seeing from continued jobless claims, the best way to measure the number of people that are currently unemployed, because this is just people filing for unemployment continuously. And usually we see recessions start at 2.65 million. We're well below that right now at 1.85 million. And if we look at my preferred proxy for layoffs, the initial jobless claims, we are still way below our cycle high from last year and still significantly below where recessions usually start. And we're still close to 2018 and 2019 levels on layoffs. So it's hard to see a recession happening tomorrow when this is the case. And we're seeing this in the real GDP numbers, which is the Fed's preferred measure for growth. We know that 2 quarters in a row of negative GDP is what's considered a technical recession. We're still pretty close to the Fed's target of 2%. And if we look at the forecast, we're still expecting real GDP to stay above 2%, at least in the short term. And again, that's all being driven by the federal spending done by the federal government and the fact that they're spending recession and wartime deficits before the economy enters recession, which is why you end up with charts like this one where the US government debt is going parabolic and the M2 money supply is starting to curl upwards as the Fed starts to prepare to go back to easing. And we always talk about how currency debasement is one of the main drivers for risk assets, which is why you see this interesting relationship between the US national debt and the S&P 500 historically. The more aggressive the currency devaluation gets, the more aggressive the denominator of the S&P 500 gets devalued, and the more parabolic the chart for risk assets look, which is why we're bullish on the S&P 500 on very large timeframes, and that's also why we're bullish Bitcoin on very large time frames as well. But let me know what you think. I know I covered a ton of information in this video. Are you expecting a recession, and are you expecting Bitcoin to bottom around the current price level? Or are we going to hit our base case for quite a while now and the current market consensus? Or are we going lower than most people expect and we're going to revisit the low 30,000s for Bitcoin before we can really get a bull market started? Would love to know what you guys expect. Of course, we'll continue to cover all the incoming data and Bitcoin price action as we approach this November election and monitor the monetary policy of the Federal Reserve. But I would love to know what you guys expect. As always, thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.